Hey, what's up guys? John here. The world's changing and it's changing very, very fast. And I'm constantly looking for pitfalls and problems that could get in my way in terms of an investment, especially in the real estate market. We're seeing real estate prices through the roof. And I'm seeing one huge problem in the real estate market that I think is going to take millions of Americans out of home ownership. And I think it's going to really, really cripple the housing market greater than anyone can even understand. Let me give you an example of what's going on, and then I'm going to back it up with facts and evidence as I always do. What's happening right now, and always has happened, when you buy a property, you'll generally put down between 3.5% and 20 or 50 or however, whatever percentage point you want to put down, as long as you're approved for the loan. You put down your down payment, the bank says, okay, great, I feel good about you as a borrower. I'm going to put down the rest, right? So long as you have property insurance and you can insure my investment. You say, sounds good, Mr. Bank or Mrs. Bank, we'll do the deal, and you buy the property, right? The premise has always been that, hey, insurance company or insurance rates are going to go up maybe 3.5% with inflation. It's going to be predictable. It's going to be affordable. You say, okay, fine, let's do that. Now what's happening is we're seeing insurance companies across the country just call it, close up shop, shutting it down, whether it be Louisiana. It's even happening now like Utah, California, Arizona, Florida. It's going everywhere, right? These actuaries, they're closing down shop. And so what does this mean for an everyday homeowner, an everyday property owner? Because if you own a property and you have to have a mortgage on it, and that mortgage lender is saying, hey, you better have insurance, because if you don't, we're going to insure it, and we're going to do so at any rate in which we think sets our risk. This has happened to me before. In a property in California, some time ago, I had insurance, but they said that it lapsed, and they charged me like 2.5 times my insurance rate. 2.5 times my insurance rate. I had to get a letter from my insurance agent, send it to my mortgage company, and then they ended up refunding me. I think they were trying to pull my leg and try to take some money from me, but regardless, I got my money back. But this is what they do, right? So if you cannot insure your properties, it's going to be a problem. Here's what's going on. So 2 more property insurance agencies deemed insolvent in recent weeks, totaling up to 7. I'm going to list all of them across the country. So here's where it gets interesting. The 7 agencies: American Capital Assurance Corporation, Avatar Property and Casualty Insurance Company, Flood Specialty Insurance Company, Gulfstream Property and Casualty Insurance Company, Sawgrass Mutual Insurance Company, St. John's Insurance Company, Sunshine State Insurance Company were deemed insolvent and entered liquidation. Okay, right? Fed Nat to cancel 56,000 policies under restructuring plan, right? This came out last month. 3 other insurance companies stop or limit writing new business in Florida, right? This came out about 3 weeks ago, 2.5 weeks ago. At least 1 Florida property insurance company unable to secure reinsurance by mid-June, and that company is Demotech, right here, Demotech. So Demotech was the first firm to review independent, regional, and specialty insurance in 1989. More recently, we were the first to call for a special session on Florida's property insurance marketplace. Since 1985, Demotech has served the industry by assigning accurate, reliable, and proven financial stability ratings to property and casualty insurance and title underwriters. Demotech's philosophy is to review and evaluate insurance based on the area and focus on the execution of their business model rather than solely on the financial size. Okay? Another one, Florida's property insurance market spiraling towards collapse. This came out about 7 months ago, right? This just came out. This was today, June 16th. Louisiana Insurance Commissioner addresses residents at risk of losing homeowners insurance. Now, what I think is going to happen, though, and if you, let's say, have a goal, maybe a life goal to own a house on the beach, time to do that might be 2023, 2024, 2025, when people can't get insurance. When interest rates go up, mortgage rates continue going up, affordability becomes a problem, a real problem. Right now, it's entering a problem. Give it some time. Things are going to get more and more and more expensive, more challenging. People that own these properties, they may have to liquidate them. They may have to sell them at any price in which they can get, right? And I think that hedge funds and private equity funds, they're going to be more focused on the properties between $200,000 and $500,000, the affordable properties, because being an affordable provider in an era in which we're in a financial crisis, what's likely going to happen is there's going to be upward demand on those rentals. They're going to be able to extract more value from cheaper properties, right? They're not going to try to, buy $1 million homes or $800,000 homes and say, you know what, we're going to turn these into rentals. Probably not, right? So if you want that $1 million house, $2 million house, whatever it is, Time might be in about a year, 2 years, 3 years, to where those properties start becoming a little bit more available at a more affordable price point. So the Louisiana commissioner is warning residents about more and more insurance companies leaving the state. After 2 years of devastating and expensive storms, many insurance companies are bailing, leaving thousands in limbo with their policies. Louisiana Insurance Commissioner Jim Dolan said there's no easy answer. The company canceled all property insurance policies will be canceled June 30th, 2 weeks from now, 29,000 policies, right? 29,000 policies. The Project Ida would cost them $200 million. About 16,000 claims were filed for Hurricane Ida, right? Right now, we are trying to stop the flow of companies exiting our state and some just pausing their writings. Our focus is getting coverage in the private sector for those folks whose companies have stopped writing or have gone into receivership. The amount of power insurance companies have is unbelievable over the housing market. People don't realize this. This paints the picture so clear, and this came out 3 days ago. Regulators should identify and mitigate climate risk in the insurance industry. The insurance industry plays a critical role in both the financial system and the overall economy. The U.S. insurance companies writing approximately $1.5 trillion in premiums and holding trillions of dollars more in assets on their balance sheet. By underwriting the risk of millions of individual businesses and private entities, the insurance industry provides an essential service as a backstop after unfortunate events. At the same time, by investing the premiums they hold, insurance companies are major institutional investors and thus have significant influence in financial markets. As the case of many businesses, insurance companies face risk due to worsening effects of global climate change, according to the International Association of Insurance Supervisors. Because of the dynamic, complex, and global impacts of climate change across the economy and society, it is likely that all insurance business will be directly or indirectly affected over the long term, regardless of the size, business line, domicile, or geographic reach. Insurance may even be more risk than other financial firms, and climate change may also present new challenges and severity of losses that the industry has not previously seen. The full severity and scope of the problem is difficult to determine at present, right? Okay. Now, Glenn Kelman, the CEO of Redfin. The CEO of Redfin. I don't know if you've seen this, but if you haven't, you're going to right now. September 3rd, 2021. Home buyers aren't taking climate change seriously. Okay? So, he says the buyers themselves are driven by affordability, and the most affordable places in America are the places at most risk of being affected by climate change. He said they're going to be flooded by hurricanes. They're going to be affected by wildfires. If you look at where people are moving, it's to Florida, it's to the southeast, which is especially flood prone and also has incredible heat risk as temperatures rise. And they're also moving to places like Phoenix, Vegas, and Utah. Phoenix is now the 5th largest city in the U.S., eclipsing Philly, according to a recently released 2020 census data. After the Arizona capital grew faster than any other major American city in the past decade, located in the Sonora Desert, Phoenix has been known for its heat, but experts say it's likely to become more extreme as a result of climate change. Utah's population grew more than 18% from 2010 to 2020, making it the fastest growing U.S. state. In that time period, according to the Census Bureau, Kelman pointed to a recent Redfin analysis that found more than 1/3 of homes in Utah faced the companies classified as high risk, right? 33% high risk. I think that this idea of climate change is going to be factored into how people think about housing. It hasn't happened yet. The only people who have figured it out are the actuaries. The people who have to calculate the cost of insuring these properties, said Kelman, who's been the lead in Redfin for the last 15 years. Increasingly, it's going to get harder to get insurance. It's going to get harder to get a loan for these properties because the lenders are going to see the writing on the wall that this is collateral risk. This is what's going to happen. This is what is going to happen. They are going to set out certain parts of the country that are going to be high risk, right? High risk, meaning that no one's going to be able to get loans for those properties. They're not going to be able to get loans for the properties. So this is going to change real estate. It's going to change real estate investing. It's going to change everything that people know. If they have commercial properties, for example, in Miami or in certain areas they deem high risk, and they need to go refinance a building, for example, that might be a problem, right? It may be a big problem when they go to sell that building. So that we're going to start to see a lot of changes across the real estate market in such a massive way. It's going to go in through insurance. I think insurance is going to really sneak up on a lot of people over the coming couple years. What do you think about this entire situation? Where do you see this going with the housing market? Drop your comments below. Let's have a conversation about this. Subscribe, hit the like button. Hit the like button. YouTube's going to share this content to educate more people about what's going on. And also subscribe to my second YouTube channel. It's going to be an interactive show and a podcast coming up this week. And if you need help with your credit score, you want to learn about real estate, you want to start a YouTube channel, build out a personal brand, cashnow.video. You have bi-weekly calls, courses, and you can partner up and work with me. That's cashnow.video. And I'll catch you guys in the next one.